weeks later, I had my first $1,000 day.
I think just to do it, like how many people say they could go and do a marathon or attempt to do it? You know, it's the constant challenge every day. Like I don't want to get up and go run, especially doing distance. Like I was always a sprinter, so doing short distance, doing at max 1 lap around a track was like the furthest I've ever done. So now doing a marathon just pushes it and raises the bar to like get me out of my comfort zone a little bit. But when you train for it and you have this laser focus to just keep getting better every day, that's where the improvement comes from, and it's just about consistency.
Tuesday, August 6th, really what I want to talk about here is a little under $14,000 profit off of about $2,000 worth of risk. And on this trade, I completely sized down because of the market conditions. So really fast, what we're going to see here is as the market sold off in the morning, this move up right here, if we were to pull up the tape, we're going to see on this rally where my cursor's at, some significant buying volume around 52.33 on the S&P. You can see this strong bubble here indicating strong buying prints. Then directly after this buying came in, there was a period of consolidation indicating that buyers were strong, buyers were accepting this move, and because we consolidated, it indicated that higher prices were likely because the buyers accepted these higher prices. And when I talk about acceptance, I'm essentially indicating that the market consolidated and built volume at higher prices. Now that's what the market looks like when it's right here before this breakout, and this is where I was comfortable entering the market long in this period of consolidation. Now directly after this period of consolidation is when we got the breakout, and pulling up the chart here, you can see the strong breakout and the strong volume that came out of this period of consolidation that most call a flag or a wedge or something of that indication. Now I knew if those buyers were strong and the buyers can continue to push price higher, there was nothing stopping the market from this period of consolidation right here. There was no supply, no resistance up into the 52.75s, and this was off 7 full-sized ES contracts. Again, completely sized down on this trade. A little under 14K profit off of $2,000 risk on August 6th on Tuesday. And it's very important to understand one lesson about market conditions. When conditions change, we have to change as traders. Now, what I mean by that is, as I'm recording this August 6th, even August 5th, there was major drop in the S&P, in the Dow, in the NASDAQ, even cryptocurrencies, and overall major market leading names. There was significant sell-offs in fear of a US recession. The Japanese market was tanking as well. And there's just been a lot of fear and panic in the market. Now, because of this, there's been large price fluctuations and large ranges in the market and very heavy volume and volatility. Now, with this, there's the offensive way and defensive way to play it, and both have to do with sizing down. When the market has this volatility and these large price swings, that means the ranges for the day are going to be significantly higher. Specifically talking about the S&P today, my trade at 52.39, my normal stop losses are around 2 to 4 points on the S&P 500. Now, the ranges that we've been seeing have been 50-point ranges in 5-15 minutes, whereas 2-3 weeks ago, before this volatility, we would see 50-point ranges in a full day. So we're seeing full day ranges in a 5, 15, 20-minute period. Because of this, we have to size down to compensate for this volatility. Now, when we size down, we can still have larger profits like I had today. My profit today was about average to all my other winning trades. This was even so, sizing down helps me on the more defensive end. So don't think that just because you have to size down is going to mean you're going to make less profits. It's not the case, because the large range days compensate for that. Playing defensive, which is the most important thing that every trader has to do, will enable you to widen your stop loss. Just think about it. If there's large swings, large volatility, large ranges, then most of the time you're going to get shaken out of a trade because you aren't compensating for the large swings. Sizing down enables me to compensate for these large swings. If my average stop loss is 2, 3, 4 points, Now, if the range has been double or triple, I have to widen and adjust my stop loss. If I were to keep my original position size, not putting any emphasis on the range, not putting any emphasis on the conditions and the volatility, then with these conditions, I need to have a 6, 8, 10 point stop loss. And going in with my normal full size would just mean a larger loss. And having a 5 point stop loss with 10 contracts is the same thing as having a 10 point stop loss with 5 contracts. We have to adjust our size relative to the risk. And the risk is going to change where our stop loss is based off of the market conditions. So it's vital to adjust your size, making sure your risk is consistent. How much money are you willing to risk per trade? Is it $50, $500, $1,000? And then adjust your position size relative to the risk. And where your stop loss will be placed always invalidates your thesis, but it will change depending on the market conditions. And it's so vital when there's volatility to size down, widen your stop loss, and have further out targets, because a 40-point winner today was probably one of my highest winners that I've ever taken in the past 2, 3, 4 months.
Just to entertain hoes. I rarely fuck with white chicks, but shout out to the Wayne's bros. Every woman's beautiful. I'm just giving personal stats. A real boss. I fund it from my personal stash.
All right, we're here at the office right now. So we're here. We are currently building engines for this 33-foot 1981 Sufin race boat. This thing, when the engines are rebuilt, it's gonna do close to about 100. We're rebuilding 2 brand new 540 big blocks. The 2 motors that we're rebuilding were out of a Formula 357 that we actually blew the motors up last summer in a poker run, a race event. So we're taking the motors out from the Formula, the 35, 357, for those that don't know boats, out of that boat, rebuilding the 2 motors and throwing it in this bad boy, which we're hoping to do about 100 in the race. So a little hobby outside of trading is racing boats and building engines.
Do you want to take us through the build a little bit?
Yeah, come on. So this right here is a motor that we just pulled out of a brand new Tesla Cybertruck. And it's currently, it's currently pushing about 515 horsepower. We have the electric motor on the bottom. I don't know if we could get to that yet. We're currently
electric adds at least another 150 horsepower.
It's currently a W16 electric hybrid.
Because it's got the electric motor, do you get a tax break?
We get a fantastic tax break here in New Jersey. They really incentivize all this new electric stuff. And
we're going electric.
We're going electric, So when we're on the water, people aren't going to hear us coming. You just look and it looks like a tsunami's coming with the waves we're going to be spinning out. So check this out. While I'm here at the office, I found my old computer. This is not my old monitor. This is just a monitor that I found in here. But my old Alienware. This is the first computer that I ever had. This is actually the computer that I started with back in 2016. So it's pretty nostalgic to, see this beast of a computer just sitting here. So I'm about to tap into this. I want to see if there's some old files, and we are in. And it's pretty ironic that I forgot this was my wallpaper. I put me and all my boys on this one race boat that we were trying to buy at the time. Pretty ironic that this is the wallpaper right now with what I'm getting my hands involved with. So this is pretty cool, actually. I just browsing through my computer, and again, like, this was back when I first started trading. I found some files in here from 2019 and 2020 when I would really dive into like recording my screens and dissecting my data and really like developing my edge fully. And so what I would do is the start of the day, I would sit here, I would have my screens recording using OBS. And after the session was closed or during the weekend, I would go back and review all the sessions and review my trades, review what I did right, what I did wrong. And it's pretty cool. I found pretty much all the files from 2019 and 2020 of me recording my screens, journaling, going over my trades and everything. So I'm going to click one of these files, and it's pretty interesting because I use all the same tools now that what's on here. Like here we have a heat map, and I use this every single day. I don't use it on Sierra anymore. I use it on Bookmap, but this is basically a heat map of all the orders coming through, looking at strong bids, strong asks, Up here we have a footprint chart. Use this every single day. So here also is a depth of market, and like these are all tools that I use on a daily basis, and it's pretty interesting to like go back. And so this is September. Let's go to October of 2020. Same thing here. Just we got a footprint chart. We got the depth of market, and what I would do is I would go and I would basically at the end of the day look back at where the major inflection points were in the market. I would say, okay, the market formed a low at this price, and let me kind of look at the depth of market and see if I could find key signals there that caused the market to reverse. Or I would look at the heat map and say, okay, there was really strong bids coming into the market. Is that what caused the market to reverse? And I have all this data, and it's pretty nostalgic actually to go back and look at it, because this is really when I was fine-tuning my edge. I was making money back in these days, but this is really when I was fine-tuning it to try to like find something that's consistently repeatable that I could easily scale up. It's crazy to look back and say nothing has changed from 2019 to 2020 than what I'm doing right now in 2024. So once you find something, stick with it. And the only way to find it is to dissect your data like I used to do here, journaling, recording your screens, going back and trying to reverse engineer setups so you can really build that edge and figure out what works in the market. So pretty sick. I forgot I had all these files. I'm going to take some time and go through them some more.
Whoa, kid it.
Holding some runners on some ES longs here. Currently up a little under 17K in profit. And this was about $3,500 worth of risk. Maybe about $4,000 worth of risk. And really now I'm just targeting this 53.29 supply zone directly above price. We're seeing a little bit of a pullback. We're seeing a lot of heavy selling here, and this was kind of my thesis for taking the long trade. So let's see if these runners pay me out. Only in 5 full-size contracts going for that pink supply zone. But now we're seeing a nice sharp pullback. All out of this trade, 53.29 supply zone. Some strong movement into this. Probably should still be in it, but my plan was to sell the runners at the 53.29 level. Little under 20K profit on this setup. Was in it for way too long. It's now a little past noon. And this thing's probably going to keep rallying on me, but I have to look at it as I followed my plan. Don't really like holding runners, but the context fit it. There was a lot of selling volume today, and when I see a lot of selling volume on a strong uptrend, usually is a bullish indication. So really what I like looking for on strong uptrending days where the buying volume is very strong, the moves up are violent, we're seeing higher highs, higher lows, we're just seeing a lot of aggressive buyers pouring into the market. What I like doing is I like gauging the pullbacks, and I like gauging the periods of consolidation. So strong moves up, the market can't go up forever. There'll be periods where we pull back, we try to sell off, we consolidate, we flag out, we form new demand, form new support. And it's important that on these periods after the market aggressively moves up to gauge the volume around those levels. On strong uptrending days, if the pullbacks are met with aggressive selling, or the periods of consolidation are met with very heavy aggressive selling, and the market can't move down, then how I look at it is that there's somebody passively buying it, somebody's patiently buying it, and it's a good chance the buyers are absorbing all of this selling pressure with an agenda to really move the market up and have continuation much higher. Now, this is really valid if the move before this was a very strong, aggressive, violent rally up. And you could do this vice versa to the downside. If the market starts to sell off, you'd ideally want to see bounces or moves up fail. That leaves trails of aggressive buyers that sellers can reload into those buyers who are expecting the market to bounce. And we saw this today on the upside on the S&P 500. We're going to see strong moves up. The market pulls back down. And on those pullbacks, we're going to see a lot of selling. And on that period of selling, the market holds and is supported by a passive, patient buyer absorbing all that selling. And this was my thesis for the long trade today. So here's the chart on the S&P. We hit the 53.29 target. And it's important to use context and have levels to kind of back this. So I had a key level here at 52.75, 52.60. The market, yes, did bounce off it perfectly, but I didn't take it long there. I instead took it long when the market rallied up, and on these consolidation ranges, right, we could see one here, we could see another one here, we could even see a full consolidation range right here, gave me an indication that, hey, buyers are factored in because the market's bouncing off the key level. We're trying to move up violently and aggressively. This was at around 10 o'clock Eastern time, so within 30 minutes the market was open. That there might be an agenda to bring prices higher because on this period of consolidation at the 5,300 whole number, there's a lot of aggressive selling coming in, and kind of what this looks like on the tape. And this is why being able to read volume is crucial. Looking at the tape on this, we can see here the market rallied up, and on this rally there was selling pressure while the market was trying to move lower, but we could not move lower. The market rallied because of that. And my entry for this long trade was, zooming out here, you could see all of this aggressive selling where my cursor's at the 5,300 whole number. I was comfortable getting long, seeing all this selling, seeing the lack of downside follow through that indicated that somebody was passively buying this and absorbing all this selling for an agenda to bring the market up higher. And we saw nothing but a rally after that. And we could even look all in the afternoon session before the supply zone hit, all this aggressive selling that came into the market, yet the market was holding. And this is how we could capitalize on these bullish moves on a strong uptrending day. Now the market hit the supply zone, and we're kind of selling off from that. So solid day, solid trading, and that's how you can use volume to kind of gauge context with other participants. All right, we're out here driving to New York City, going to film a podcast with another trader who's actually from Dubai. Going to be a lot of insight. Really want to dive into talking about my trading strategy, how I navigate the markets, what I look for, my confirmations, how I come up with my levels. I really want to dive into technicals. I feel like a lot of the podcasts nowadays are more about, psychology and how did you become successful. And, I have tons of videos on that. Everybody else that goes on these podcasts talk about that. So I want to be unique. I want to be different. And I really want to talk about how I trade, how I view the markets, and how I navigate them, and what I do and what I look for on a daily basis. That way people can really gain insight of someone who is a short-term trader, and what to expect and what to think about on a daily basis in terms of execution, in terms of finding levels, in terms of trade management. So I'm looking forward to this. Gonna be a lot of insights, and by the time this vlog is out, the podcast most likely won't be out, but you're gonna have to stay tuned for it.
Yeah, I'm outside in an AMG, right outside, TT, two-turn baby girl, you know me, still with the dolls that I grew beside, all the around me, right till they die, gotta watch the time, cause it's
Just checking out your car, admiring it.
It's so clean, bro. Oh my god.
Love the Carmine package,
Bro, you did it, for real. You did it. This is nice. Shout out to you. So, Tesla chart was market open right here. $1,000 day, first ever $1,000 day. Let's go. 4 years in the making. 2 weeks ago, I had a $400 day, which was my biggest day so far. Really focusing on my own trading style, risk management, journaling, TradeZella. Shout out to TradeZella. And I was like, damn, I cried at my trading desk. And then 2 weeks later, I had my first $1,000 day. Same risk management, same setup, supply and demand, everything I've learned on YouTube, like Carmine's videos as well, my own trading, past experience and just reflection and journaling. So I saw myself getting greedy, but I stopped myself. I was like, no, risk management is the next trade is the one I should focus on, not just making the most and making a home run. So like all these other trading groups that I've been in, they make you want to go for the profit. So from years of being in other trading groups, I was like, bro, you can't go for the profit. You have to focus on the process. You have to wake up on time. You have to sleep on time. You have to journal. You have to manage risk, all of that. And then the profit comes. But if you wake up in the morning and say, I want to make $100, I want to make 200, 300 bucks, you're not going to make shit. You're going to lose money, bro. That's what I learned the hard way.
I mean, just going off that, if you're not being consistent outside of trading, whether you have hobbies, working out, have a diet, how do you expect yourself to be good in trading and not be good in, outside of life, you know what I'm saying? So, outside of trading. So his YouTube videos especially, and even his Discord, I mean, it's priceless, man. It's like unlimited value, and you can put it, interpret into your own trading and your own edge. So, I mean, other than that, I mean, it doesn't get better than that. So
Self-sufficiency.
Self-sufficiency, yes, sir.
That's perfect, right there, perfect.
Got it? You got more than one?
For the culture.
You guys want to say what's up to the vlog? As always, every Sunday night we do a Invest to Trade webinar. We prepare for the week. We go over the setups that I'm watching, levels that I'm looking out for, and just get our mind right, our charts right to prepare for the upcoming week. That way we could take some good setups, manage our risk, and really focus on the highest quality structure in the market and help avoid minimizing all the noise. We can find so much noise, whether it be going on Twitter, Instagram. People are bullish, bearish, thinking the world's going to collapse, thinking we're going to see the thing's going to rocket. So it's all noise. You really have to trust yourself. You really have to focus on high quality information in the market, high quality structure. And at the end of the day, yes, we trade. Yes, we could call ourselves traders. We really are risk managers. And that's something that I really stress. So I'm about to do this webinar, find some good setups. That way, come tomorrow, come the start of this week, we're prepared for whatever the market presents to us.